Welcome back everyone to our episode 6 of stock review. So this is the first time I actually show my face right now. I actually started showing my face when I'm doing shorts video. After doing certain like 2 to 3 short videos and I'm sort of comfortable now to document my face while I'm recording my video of reviewing stocks, and this is kind of like a documentation for myself and also to let 10 years later me to see what I have changed during this period of 10 years time. So let's move on to the video. So today we will continue to review one of the stocks, which is one of the Mac 7. We have done Google, we have done Microsoft, we have done Amazon, Tesla. I just make a short video about Tesla plunging because of some dramatic argument between the Trump as well as Elon Musk. I don't know whether this is scripted, but just my guts and saying that hey, they are scripting all this kind of stuff. But overall, I do think that Tesla, even though I can see that Tesla is actually making revolutionary involvement and innovation such as the robot taxi, their humanoid robots, it's really actually quite incredible. It's really caught my interest, but it's just that the fundamental of their financials, their earnings, their cash flow are not stable, and I might miss out a huge opportunity to earn a lot of money, but I would prefer to stick to my own plan as I'm more comfortable to hold companies with great cash flow, increasing ROE, ROI, so on and so forth. Now, we'll be looking at Nvidia. So Nvidia right now, as mentioned in previous short videos, if you guys have seen, I actually mentioned that Nvidia just turned green with its recent earnings. So this company, right, the earnings after earnings report, the market plunges. Similarly for this one, see, market plunges. Similarly, another just February this year, the market tanks. Okay, this one is literal tanks because of the tariffs, of course. And then finally, I see some changes. We have the stock price going up. Okay, it's not a lot, but at least now it starts to change the direction after the earnings report. Okay, this report, right? Some said it's not good enough. Okay, some say it's good enough because that is why the stock market actually went up. But the reason why it did not go down is because of slight value. If like it missed like maybe 1 million to 2 million of revenue earnings, ooh, it's gonna repeat the history, which is plunge after the reports. And now let's just look at some of the values, fundamentals. We have the debt to equity. So I would like to take this opportunity to sort of like explain debt equity myself, because myself, how I identify stocks which is high cash flow and low debt, right? Which is just simply look at the free cash flow that it has and then minus the total debt. And then if it's positive value, then the company is actually in great conditions, meaning that it has more money than debts. So this is actually learned from Adam Khoo, and this is actually quite useful as any value of debt equity, right, under value of 1 is actually considered as good company with low debt and high cash flows. You can see the PE ratio, right, it's actually quite high with 75 value. But then I do still think that Nvidia right now have potential to grow further because of incoming demands of chips which they announced. Plus, the terrorists between China and US right now is actually sort of coming to the end. Will it like suddenly burst up again because of some certain news or certain disagreement? That could happen, but at the moment of time, what we have visual on, what we have the information on is that, wait, China and US now is actually coming to an agreement whereby both sides are satisfied with the policies as well. And another factor which we will be looking further is the ROE and ROI. ROE significantly better, My perspective is that any ROE and ROIC greater or equal than 13%. Okay, but if you want to be conservative, yes, you can go for above 15%. That's like most people will do. And this is 115%. That is significantly great. And moving on to the revenue, we can see, this, when we look at stocks, right? The stocks is either go down or like, okay, go smoothly up or like go flat. Matured company lah. Look at Nvidia. This is something very, very aggressive, okay, in terms of earnings. It just go 45-degree up. This is better than exponential increasing revenue, so there's nothing to worry about. And moving on to the net income, also increasing net income. So this company is significantly generating more money, generating more revenue in terms of sales, in terms of their services they provide, in terms of the chips they sell to the big companies, big institutions for them to train the AI models and so on and so forth. So we can see that Nvidia, why is it sitting at Max 7 is because of its increasing revenue in a really, really fast-paced and aggressive motions to the upside. And moving on is the free cash flow. So this free cash flow, right, indicates whether or not the company holds a lot of cash. So if company have a lot of cash, that's the best. And when they have like certain other investment or they want to invest into their own company for another field or another section of innovation researchers, then they have this pile of money where they can put into that segment in order for them to do their research or to reinvest to their companies lah. If there is a lot of cash flow, there's no worries about the company going bankruptcy or whatsoever, because as Peter Lynch said, it's impossible for any companies with great money and no debts to go bankrupt. It's really impossible. It's just that maybe that company won't generate that much of a revenue, but as long as they don't have any debts with not like high cash flow, but a certain amount of cash flow or even like positive cash flow is enough for them to survive in the market until where they actually used up all the cash flow and then maybe out of money already, then they need to start taking out loans, and then that's the time where they have debts and more debts accumulation with no revenue growth. So in terms of short information about the dividend paid, the dividend of this kind of blue chip stocks, not blue chip stocks, technology stocks, right, it's actually quite low, but then yeah, it's significantly increasing dividend being given out, meaning that hey, the company is actually making a lot of money that they actually can give out to their shareholders. For this website, right, I don't have buy the upgrade premiums, so I'll just use whatever I can see behind the screens, okay? And we can see there is increasing ROIC, all right? Stable above 15%, all right? For the past 5 years, even I would say like 8 years to 10 years lah. But then we actually have values below during the 2023. Is that the time where bear market happens? Not sure, but then hey, ROIC is increasing and significantly above 15%, which is at 75%. As for ROE, right, you can see that yeah, it's increasing also. And the lowest is being at 2016 at 13%. It's also higher than my criteria. My criteria is that as long as it's above or equal to 13%, then hey, this company is considered as great. And finally is the research and development expenses. This indicates that how much the company actually spends in terms of putting more research and development so that they can maybe create certain new products, new services to their customers, and creating a new streams of income, or maybe improve the current situation of the product, which attracts more customers. If the game that you're playing right now just remains the same version without any updates, without any new heroes, new maps, would you actually consider to continue playing it? No, right? Same thing for different companies like this. The product they produce, they need to like maintain a level of innovations, because like people get bored. Okay, unlike Coca-Cola though, Coca-Cola is something very special. It's like a drug, you know, people drink it, they just can't stop drinking it. And if this company doesn't exist right now, right, I think it's gonna be a apocalypse around the world. Like, why there's no Coca-Cola? Coca-Cola is crazy, like McDonald's as well. This kind of consumer stuff, right? because I think like it's optional lah. Maybe Monday I go eat, Tuesday I go eat, then suddenly I don't want to eat, then I go eat something else. Maybe Thursday, Friday, my appetite said, oh, I want to eat McDonald's again. I didn't say that they don't have any innovations or like new stuff. They do have. They have promotions, new design model, new collaborations with celebrities to make like the can very beautiful. Got the celebrities at the can outside, so you can buy drink and then you collect the bottles as well. So it's pretty cool. But then this kind of product, right, it requires increase in performance because what we are using, right, we want more. So yeah, you can see that the research and development rate they put in is actually increasing significantly. And now I will be using this stock analysis, right, to further some of the matrices evaluations. So as mentioned, when I want to spot a company with a lot of cash and low debt, I usually do subtraction of the total cash with the total debt. And the rest, if it's positive, then yes, it's positive cash flow, meaning that the company has either no debt or we could say that low debt has lowest debt. Like requires me to look for two different places in order to gather those information before I can do the calculations. Using this stock analysis, right, is quite good with its ability to just tell me the net cash. So basically it's just, he got say, net cash or net debt is actually the total cash minus the total debt. So if it's positive and increasing, indicating that, hey, the company is in the growth of free cash flow and low debt. So after looking at the matrices, right, wow, it's incredible for its financial performance. It's really good, really solid. If you ask me whether I would buy or not, I already bought Nvidia like few months ago already, like last year, November something. I experienced the downward trend, pullback. I hold it, I didn't panic sell. Now it actually comes back up with slight profits of course. If I were to buy again, if I have the money allocations that I want to invest, I wouldn't buy Nvidia right now because it's actually sitting at quite high I would actually wait for to retrace further, maybe like to this area of support. Right now, the situation of the market is argument between Elon and Trump, and rate cuts perhaps coming in, as well as recession as well. People are scared right now because of all the financial economic reports that pointing towards recession, high unemployment rates, low ADP, low NFP, low CPI. It's kind of like signifying contraction of the US economy. Is that gonna happen? I don't know. I'm not a sorcerer. I cannot predict the futures. But what I know is that Nvidia is a good company. If it tanks, yes, it's a great opportunity to buy if you want, and that's of course is based on your decision making lah. So I'm not here to tell you that, oh, you should buy this, you should buy that, but instead it's just that I bring you together with me to look through the financial reports, the revenue, the net income, the ROIC, ROE, like, maybe sort of like come up with certain theory why this increasing, why is it good. I'm not telling you, oh, you can buy now. No, I'm not telling you to buy now, okay? I especially don't buy now. Why? If it tanks, you're gonna suffer a lot, okay? And if you don't have big hearts, right, you're gonna panic sell. You sure panic sell, and when you panic sell, you lose money. And the first rule of Warren Buffett is what? Not to lose money. This is the simplest game. Don't lose money. And what's the second rule? Don't forget rule number 2. Rule number 2 is to follow on back rule number 1. So just stay in the market in the condition that you buy something that you know, that you understand, and that is great. Right? Don't buy something like, oh, Bitcoin at the high, and then why suddenly it drop? Why is Bitcoin? You don't know. I don't know. Yeah, you don't know why, then you buy Bitcoin. Bitcoin, right? People buy Bitcoins because, hey, this is the future. The Web3, buying NFTs, this is gonna be the future currency. Hey, they know. They're willing to take the risk. They go. And then for you, for myself, for example, hey, I know gold right now, the market is very tight, the economic is like contracting, it's like very dangerous, people are scared right now, very bearish, so I buy gold. Why? Gold is the best hedge towards bear market or like fear of the market. It's not the best place to place your money from stocks to go just for safety and hedging lah, of course. And for me, yeah, I also know like the technologies, the Apple, Nvidia, whatever, Amazon as well, those kind of tech company. I can see it around me. I use it. Like for example, I use Google, Microsoft Teams, Amazon, the cloud services, the data center is actually widely spread, especially in Malaysia. They start to like planning a lot of buildings of data centers in Malaysia for cloud-based services lah. So now I'm asking ChatGPT to help me analyze the stock of Nvidia, the current strengths and limitations. So let's move on to it. So first, the strength is actually dominance in AI and data center. So yeah, it is what it is. Okay, it make AI chips, they sell it to big companies that wants, and then most of them, it says that approximately 90% of the AI chip market is the leader. Okay, it's a leader. Not even AMD can beat it. AMD right now is, I don't know whether somewhere around there lah, but I quit buying AMD a long time ago because of bigger economic mode than Nvidia. Nvidia is stronger. It's like Coca-Cola and Pepsi lah. I do think Coca-Cola is better than Pepsi, but yeah, people still like Pepsi, a high dividend stocks. Defensive consumer for Coca-Cola, yes, very good one. But then that's the difference lah. Okay, but then I do think that these two company doesn't have that difference gap that huge as compared to Nvidia and AMD. This company is like very huge because Nvidia, like GPT says, approximately 90% of the AI chip market is by Nvidia. So very obvious. And robust financial performances. As we gone through increasing revenue, increasing net income, increasing ROE, increasing ROIC, free cash flow, low debt, pretty cool. And strategic partners. It also has notable 7 billion deal with Saudi Arabia's humane startup Enhance Nvidia's. Oh, this is it the one whereby the Trump go and negotiates with the Saudi Arabia? I think that's like different. That's between country, right? It's not between Nvidia and Saudi Arabia's. I'm not sure, but I think it's because of Trump as well. So we have such huge investment from Saudi Arabia as well, which added up to Nvidia making it like high demand in order for them to start up like global search, global reach and revenue streams lah. And then we have strong financial health, yeah, low debt to equity, current ratio sort of stuff. But I don't look at that. I don't understand that yet. It's not like I'm not saying it's useless. It's just that me myself, I don't use that. I use other methods such as to looking at the net cash or the debt to equity ratio. That's my style. And for the value limitations, the value concerns is that the intrinsic value is at 106, suggesting that the stock may be overvalued. That's true because we also see the PE ratio 45, right? Indicating really high. If the PE ratio is actually around 25 to 35, then pretty good lah, pretty good, stable, really good company. But doesn't mean like it's really too expensive or it's gonna go down. May happen, but will it happen? I don't know. I only know it's a good company. I'm buying and holding it for 3 years, 5 years, 10 years even. Maybe waiting for it to go 10x, 20x now. 20x impossible, but possible still. And also geopolitical risk, which is US export restrictions, tariffs, right? They haven't set up. I'm not sure about this information, but moving on is the supply chain dependency. So this relies on a limited number of foundations such as TSMC, expose Nvidia to potentially production delay and geopolitical tensions. Oh yeah, this is because TSMC helps to make the chips for Nvidia. Nvidia just provide the blueprints, and then I have the idea, I know how it works, but I don't know how to make it. TSMC help you to make it, and there's like tensions between Taiwan and US sort of stuff lah. So yeah. And also market volatility lah. Market volatility is because of like certain effects, like DeepSeek is one of them. It's like really huge news. That time, right, market thinks like, oh no, DeepSeek is going to replace Nvidia or ChatGPT whatsoever. Why? Because they said require less chips, right? So Nvidia has no market already. You doomed, you are dead. No lah. Right now, we come back to almost my break even, slightly earn a little bit. I'm not showing off, but just that I really hold that stock for a long time. And yeah, I'll be sharing my experience during this pullback of the market, because it's actually quite new for me as a beginner trader, or beginner investment in stocks as well. So that is all for today's stock review on Nvidia from Max 7. So overall, I think that pretty cool. Nvidia is one of the top sentiment company with great sentiments, bullish all the way. Am I here to tell you to buy? No. I'm not telling you to buy. I'm not the one telling you. I'm just walk you through with me. Okay, I bring you and walk you through with me and see, oh wow, look at that, the revenue and then sort of stuff. I'm not telling you to buy. I'm not telling you to make any decisions. That is all for today's video. And if you have any questions, or any stocks that you would like me to review as well, leave it down in the comments, and I'll see you on the next one. And if you like the video and contents, support me by clicking the like button, subscribe to my YouTube channel, and I'll see you on the next one. Bye bye.